learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down.
Oh, didn't see you there. Welcome to Mr. Josh's Neighborhood. Today, we're going to talk about all the BS for quarter one. Let's start it off with bonds. Their worst drawdown ever. U.S. bonds. Third worst Q1 since the Civil War. The yield curve. Greatest flattening in one quarter ever. Commodities. Best start to the year ever. Oil. Best start to the year since 1999. Regular gasoline. Fastest move to a record high ever. U.S. stocks. Third biggest short squeeze rebound since Lehman Brothers. And the ruble. Back to levels before the invasion. Welcome.
All right, man, I don't know if I'm going to keep that, but welcome. I hope you're having a wonderful day. We are going to talk about quarter one, everything that happened today, and the plays that we get from it because it is BS. I know, I'm sorry, I've been talking about this for a while. Yes, we need to talk about the craziness of the market, but today we did another oil drawdown or SPR release. Again, here's the chart. This is just from November till now. Literally, do you realize it was the beginning of this month that we actually did the second one, but now we are announcing the biggest one. I told you about oil, and then the next thing that is even crazier about today, you see it, stock sink to first quarterly loss in 2 years. Again, people are talking about everything that's happened, but right here's the big one. Putin says gas exports will halt if ruble payments aren't made. So this is what we're going to talk about. I have an oil play for you. I'm going to go over some of the plays we made today, but some of the old plays so you could see why I like this oil play. I was going to go over a bunch of them. If you don't know, just watch the recent videos. I'm in the B&Os, and we have been talking about oil literally for months. Like months, we've been talking about this. So now that it's here, and now that we get some, updates to it again, what's going on with Germany? Tomorrow is a deadline with Russia. There's a lot of plays I want to go over, but I'm just going to focus on one, and I really think you're going to like it because it kind of has a criteria. So that's what we're going to talk about. Again, today was very simple, and I got a bunch of plays I made, and yeah, that's it. And then, I don't know, you like the Mr. Rogers outfit? I tried to, honestly, I went for the goofiest thing I could go today. I mean, I like this. It gave me the Mr. Rogers idea. I thought if we put on the chain, it would look even more awkward. And look, he's still got the ball. It's a misprint, but then this shirt, it makes me look too swole. Lending Tips was making fun of me. He said I kept wearing Baby Gap shirts. And anyways, but all right, I messed up the camera. I had to start over. But where do we start? Again, all of these statistics on the quarter, I hope you do not miss it. This bond divergence is very, very important. That is the number one thing that we have to be looking at right now. But then oil and what's going to happen. So this is what I'm trying to say, part of the BS here, this oil release, I do not have any confidence in it. Literally, the first time we talked about it, I said this is going to actually be a signal. This is where the original Omicron pattern played out. So what I want to show you is a very key level. If we want to determine whether or not oil is going to go up or down again, because I could be wrong. Please keep that in mind. I'm not making these videos to say I know everything and that this and that. Like, I really hope you guys get that. I'm fine being wrong, right? It doesn't matter, early, late. I know I'm usually early with a lot of things, but what I'm trying to say is that this is what I'm going to be looking at. So if oil drops below 95 on Brent crude /BZ, and we go below 95, even down to 90, and below that, it has to go below and stay below, that will kill a lot of the momentum. Then this whole 150 oil going up, all of that is going to change some things. But if all of this news brings things down, they are not going to release the new oil till May, and then we start seeing things come back up here. If it doesn't break below 95 or even 90 there, and we don't see strong closes underneath those levels, it's going up. is going up, and that's what I'm going to be going after. And this is now what I'm talking about with the play, because this is what I am going to be focusing on. So I'll get to the play here towards the end, but now that is the first thing. This is the biggest BS right now in the market, is that this oil energy situation is just going to magically go away and we are not going to deal with this. No, we are going to deal with it, but don't forget Europe. Europe is going to deal with it first. And now with seeing these things with how the ruble's been behaving, but now Putin, people thought he was bluffing on this whole, we want rubles. They thought he was kidding. They thought he wasn't going to go through with it, but he signed the decree literally today, comes into effect tomorrow, but that's what we're going to be watching for. You even saw some reaction with US LNG, which was pretty wild to think about, but the point is the energy situation is not going to go away. If the war goes away, it's still bad, but on top of it, that just makes things worse. So this is what I'm saying, because you can see here again from the SPR releases, usually it's only gone up. Historically, it has been like this. Eventually, it will chill out, but we're talking like 12 to 18 months. Usually, the price of oil about like a year to 2 years from now after the SPRs, it usually ends up where they did the SPR. So essentially, I wouldn't be surprised in 12 months if oil came right back to these levels, or at the very least, we were here, if not higher. So this is what I'm looking at. Again, the price of oil to determine it, and then I'm going to go for the bigger play there, or at least do what we've been doing. We've been buying, we're holding the Brent. You've watched us play XOM. We've got the Phillips. I have a Conoco Phillips. We even got all these other, commodity and other material plays. So we're just going back and forth, and it's really about waiting for the premium and letting this slow situation that is based on fundamentals, letting it play out. So that's the big key there. That is oil. I mean, it's very upfront in your face today because that's all we heard about, but don't forget number 2. That's 4, but 2. What I'm talking about is the bond divergence. Literally, all of these stats. This is the worst bond. Why am I talking like that? I'm clapping to you. It's the worst bond drawdown ever. So all across the world, we have never seen bonds sell off globally all at once to this scale. It has never happened. You are alive for the moment. That has not occurred. Again, this is the worst first 3 months for bonds in literally since the Civil War. So just keep all of this stuff in mind, because this is absolutely crazy, but this divergence is huge. We keep bringing this up, and this is the next play. How am I going to go about buying it, or how am I going to play this? I will look for TLT in the bonds, but that's not the first move. If anything, I'm going to go after the SPY or QQQ, and we're going to utilize some of these option strategies to get us cheap plays, but we need a confirmation. We need to be able to see that the market is reacting here to the Fed futures. And again, today, you see it's kind of leveling out, but last time it leveled out here, the market was up, and then the next 2 weeks, Fed futures chilled, bonds chilled, and the market came down. So we're going to see what happens with that, but this is what I'm saying. All of this BS, the BS right now is that people are ignoring the most important factors: oil, commodities, what that is going to do, how that affects markets, and where it goes from there. That is the big key. The bond market and what the bond market is signaling, even down to the yield curve, that is the next big thing. We are going to get earnings, and that will be its own independent event, but just get ready, because 12 months takes a long time, and we're going to get a lot of up and down in doing this. So I hope you guys are able to focus on the things that matter. So that's the key. Don't get caught up in it. Don't get lost in the sauce. I really hope you're learning. And again, if you just watch the latest videos of this style, because usually I'm not in front of the camera like this, I've tried to make it simple, and that's why I hope really this simplifies it for you. Again, even so far, watch for the divergence, watch for the market to catch up with bonds. That will be your signal. Oil, it's going to go up unless it breaks below pretty much $90, $95 to give yourself a little bit of a cushion, okay? So that's pretty much it, and that will tell you a lot. Now, the play, ConocoPhillips. I'm already in this play, and this is the big one I'm going to be looking for. I don't know how big I'm going to go into it, but I'm just saying I like this the most. People were asking me a lot today, are you going to buy oil? Are you going to buy oil because the SPR? I said, wait, I want the premiums to chill out, and you'll see this volatility, these are the opportunities it creates. Literally, some of these plays till August are down right now. So I bought this play, and I'm down 50% on it. So what I'm telling you is once things start to chill out from here, I am pretty much going to go for these plays. I may go closer to the money, but at the very least, I like these. Now, why? It is lagging. So this is kind of like the frog, but this is what I'm trying to show you. Since I bought that play, ConocoPhillips, it's not up yet, but it's not as down as much as the option. Pretty much, I bought it with more volatility. Remember, we got that one with the PSX, but the PSX was closer to the money, so we made over 100% on it, but this one is far out and it has a lot of time. So this play didn't really, it went down while all of the oil stocks were going up. So what does this remind you of? EXC. Remember this play, it was the same sort of logic here. Here you could see the EXC in the money overlaid. When I bought it, the stock was up, but the stock barely moved down and I lost 50%. But then what do you notice happened? The stock kept going, and for days, literally days, and that's why too, you don't need FOMO for any of this. You can be patient. You don't need to rush it in this volatility. I know it may sound counterintuitive, but pretty much you had days for it to really catch up and say, okay, well, if it's going to keep going, everything on the chain besides the near the monies, they're going to go with it. So I'm going for the lagger, and this is pretty much the idea here with the play. So this is why I like it. It's the ConocoPhillips, the August 155s, I believe. Is that what it is? Yeah, I'm making sure, double checking. But as you can see, ConocoPhillips, they're starting to go up, or they're a little bit down and they're kind of moving, but the option has definitely moved a lot more. So what I'm trying to tell you is wait a little bit. I'm not going to buy this tomorrow or anything. I'm going to wait till ConocoPhillips starts going up, and then the option lags, baby, and it'll be just like the EXE, and those even came back up today, so it was great. We even averaged down and played through it. It was beautiful, but that is the next one that I'm looking at, and pretty much now, oil, commodities, and bonds, do not forget about them. Little by little, all of these events, it's going to drive us somewhere, but let's see what earnings does in the meantime. So there's that. As far as everything else, I did make a couple of plays today. Two of them I like. I mean, I like it, and I'm just feeling. I'm just throwing things out there, and it's like $50. I did spend $150 on one, but the first one is Baba, and this play actually did pretty decent today. It's up like, what, 20%? It moves really slow, and I said this today. Baba options, they move very weird, especially at these lower levels where it kind of gets pinned. Pretty much, it just moves really slow if it goes in your direction, if you're out of the money, and then if it doesn't move, you get clapped 50%. I think we're all used to it now that I think about that, but anyways, so Baba moves a little bit weird, but I decided to go with one of the plays. Which ones did I grab? I grabbed the May $70 put. I only grabbed one for $60. It went up there, like we said, 20%, but I like it. There's been a lot of China news from China itself in talking about crackdowns, and then even Gary Gensler today, he brought up China. So that's one thing I'm going to be focusing on. I feel like we may get news from them in a week or two. They're kind of coming down, and remember, there was that big drop on the Shanghai Composite. It chilled out for 2 weeks with the rest of the markets, and now we'll see what happens. But now the next play, Tesla. I grabbed the Tesla put, but just go look at the charts over the last couple days. I mean, everything looks like this. Remember what we were talking about yesterday with correlation, so got to watch out for that. But I feel like they also have some of the China benefit, but the charts look the same. I got smacked on a Tesla put a couple weeks ago, so I want my redemption. I got one for $150. It was the 835 put for April 14th, so 2 weeks of time, $160. I got it at perfect timing right before things dropped at the end, so we already went up like 10 or 20% on it, so not too bad, but I really like that one. Going to be holding it out. And then finally, the other two plays that I got a Lowe's next week 192.5 put, and this one showed up at the scanner. It actually did about like 70% on the day. It was a pretty wild gain, but it showed up on the scanner. Home Depot was already coming towards the lows. People, I think there was something with Lowe's in their margin, but they opened up down. I think it was an analyst downgrade, and then that trade came in. I said, let me grab one, and again, another small play, $50. It's worth $100 here now at the close, so going to be writing that out as a short-term kind of volatility exposure. And then finally, I went with Hershey's as a safe haven. I grabbed Hershey August 260 calls. I grabbed one of them for $1.10. Hershey's is a great recession play. They don't spend money. They return a lot of shareholder capital back, and just look at the chart, man. I'm telling you. So I thought we might find one of those winners to ride the way up. So we will see what happens. Those are all the plays. I hope it helps you, but just don't forget about this stuff. Don't go back, please. Watch the other videos. You can see the EWG, the VG. I think I end every video with BG. Man, okay. So just go watch it. I love you. God bless you. I burped in between saying that, but God is still good. And honestly, I just hope you're picking up on this. Get ready for oil. If you guys have any oil plays, let me know. But I hope you know too. Have money for the next move. You could be patient, and hopefully you're getting used to some of these patterns, the up and down, and it'll either gap you down for a little bit or it'll gap up and do its thing. But be patient, control the balance, and you're living through some crazy moments right now, so I hope you're ready. So let's go, baby. Make sure you are hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you in the morning. And come on, baby. Control what you could control. Stop. Are you external or internal? Just tell me what it... All right, I love you, baby. I'm gonna not... This one's awkward. I just don't want to... You leave. You like the video. No, you leave. You stop. This one is probably the most awkward one. Okay.